Volatility is officially back for 2025. I've said this before. I'm going to say it again. 2025 is not a time to F around and find out. And if you haven't spent the last couple of years honing your skills in terms of technical analysis, finding levels that you're willing to buy quality stocks at, you are going to pay a big price in 2025, in my opinion. Now, what happened over the weekend? Over the weekend, Trump imposed tariffs on Canada, China, and Mexico. 25% on Canada and Mexico, 10% on China. Now, this may not seem like a big deal for the simple reason that US exports to Canada as a percentage of GDP is only 1.5% and to Mexico is 1.2%. However, Canada exports to the US is a much bigger percentage of their GDP, same as Mexico. So in this video, I want to get into what does this mean for the stock market and what moves have I made and am I making right now in light of this news? Because I'm going to tell you right now, I'm not going to sugarcoat it for you. 2025 is not going to be pretty. How do I know? Well, because the same exact thing happened in 2018. Let's get right into it. So I tweeted this on X. Follow me on X and Instagram for daily trading and finance content. And I showed this chart showing you that when the market closes green in January, the rest of the year is usually good. This is about an 88% success rate. We did close green this January, even though Friday, the last trading day of the month, as of the time of this recording, was pretty ugly into the close, but we still closed green. However, I want you to look at the last time that we were severely red after closing green in January. That would be 2018. 2018 January was 5.6% on the S&P. The rest of the 11 months, minus 11% for a net year loss of minus 0.6% on the S&P. Remember that we've had back-to-back years of 20+%. We've never had 3 years of 20+%. So if we go back to 2018 on the S&P 500 and look at this chart, you could see how volatile this period was. Here's January 2018. Looks like now where we hit all-time highs. Here is February 2018, and then the rest of the way up until Q3 of 2018. Look at all of this volatility. Look at this drop here. What happened in January 2018? Well, what do you know? In January 2018, that's when Donald Trump, during his first term, began setting tariffs and other trade barriers on China. This officially started the China-US trade war. By the way, Biden never rolled back these tariffs, so they're still in place, and Trump just added more tariffs in addition to these on China. But it's important to note that when you see these clowns online saying that, oh, tariffs mean nothing, tariffs are bullish, okay, tariffs for the short term mean a lot in terms of the market. And when the Fed is going through its cutting cycle, trying to engineer a soft landing, and we're trying to ensure that inflation doesn't come back roaring, right? Tariffs become an even more precarious part of the picture. In 2018, we were not going through rate cuts. We were not going through a landing cycle, right? It was just a normal bull market in 2018. And this is the havoc that it wreaked in 2018, right? Now we have a cutting cycle. We have valuations, at least for the Mag 7, at all-time highs, matching what we saw in the dot-com bubble. And the Fed is trying to engineer a soft landing, right? So imagine the type of volatility that's going to come. Now, if done correctly, yes, in the long run, tariffs can promote industry locally once again in the US, right? As things that are imported become more expensive, that might incentivize US businesses and even foreign businesses to start producing here, hire American workers, produce things locally, right? But that takes a very long time, especially when you don't have a product that currently replaces something that's under tariff. So if say for instance, there are American TVs and Chinese TVs, right? With tariffs, yes, it would incentivize Americans to buy the American TVs because the Chinese TVs are now more expensive due to the tariffs. However, if you have certain parts and products that we currently don't make, right? Say iPhones, for instance, there is no alternative. It's going to take a long time to shore up the industry here in order to start creating here. In the meanwhile, these things are going to be more expensive because there is no American alternative. So in the long run, yes, it could spur manufacturing locally. It could spur the production of American business. But in the short run, it's going to create a lot of price variability. Therefore, it creates a lot of volatility in the markets because these are companies that base their earnings, base their reporting, base their sales, base their net income on sales, which are going to be affected by pricing. So before we jump into the individual stocks, where do I see the market going? Well, obviously, I see volatility carrying. I don't see any of these gaps that we created, like this gap here on the SPY between 585 and 590. I don't see this being unfilled and continuing up. I think the market is coming down here. I think the drop could be worse. Obviously, we are again in a cutting cycle. We are paying attention to yields like a hawk. These are things we weren't dealing with in 2018. The volatility could be absolutely bonkers. And this is why I said, if you guys are in short-term positions, you should consider letting them go in 2025. Long-term positions are a different story. Long-term positions, all you have to do is buy quality companies at discounts. So if you decide to, for instance, buy NVDA at the 200-day moving average, great. If you then say my next buy point is the 300-day moving average, which is mine, by the way, so around 105, great. You're buying a quality company at a discount. You're not trying to play the short-term game. In the short term, you have to be very precise about your trades. You cannot just buy AMD calls or NVIDIA calls. You know, even if you look at my last couple of videos on NVIDIA, I did not suggest buying short-term calls. I didn't even suggest buying leaps. Just wait, buy the stock if it keeps dropping at major levels, only for the long term. These are not swing trades. Now, onto the swing trades. The swing trades that I did actually play and capitalize on. Uber. We bought Uber calls at the retest of this level here. I told you guys about Datadog. I told you this on the YouTube channel. Bought Datadog at the retest of this resistance level that is now support, right? Exited those. Costco, I gave you guys this one too. Costco, we bought twice. Bought it at this level here and at this level here. You can see my alert here on January 28th. I said adding a new set of cost calls here. I bought the February 21st 960 calls. And then January 30th, I said closed my entire cost position. March and February calls out for 75%. So the theme of this market is you are going to be, if you want to swing trade, you have to be very fast with cutting your losers and very fast with taking profits, right, at major levels. But you have to be willing to cut your losers like this. You have to be willing to take profits at major liquidity levels like this, in my opinion. And if you want access to all of my trades and you want to get all of my swing trades, link is in the description below. So the first trade that I will tell you, the first trade that I took in this wave of market volatility after January, the first position that I took, I bought these 78 calls on oil. Now, why did I buy calls on oil? If you look at the 4-hour chart of crude oil, you can see that we've been in a downtrend since middle of January. Clean, looks even engineered, lower highs, lower lows. We broke out of that on Friday. And that was the day that the news came out about the tariffs. And there was uncertainty about whether Trump would impose tariffs on oil or not. And he has, even though they are minimal compared to the rest of the tariffs. And we buy most of our energy from Canada, by the way. I think 60% of our energy comes from Canada. So because of that, I bought calls on USO. I bought these 78 calls because there's a correlation between crude oil futures and USO. You can see here, it's the same, almost the same exact pattern that we see, right, with this breakout here. And if we get a nice clean breakout and a retest, I will add to my position to trade it to that $80 level. Sorry, I meant this 82 level here on USO where we have this gap. Now, here's the important part because I get comments all the time, right? So say that I end up buying calls on something. Like I say I'm going to buy these Uber calls and this is my target. A lot of people, what they do is they don't pay attention to exit points. And so they buy calls and they'll just sit on them and hope that they work out and let them go to zero. You have to be able to cut your position loose. As a matter of fact, earlier, and I even gave you guys this play, which I ended up getting stopped out at, and then re-entered it, but on NVIDIA. If you guys remember the first NVIDIA play, I said, if we get below this level, I will exit my NVIDIA position. But I like this level here because we have support, resistance, support, right? There was a big level here and there was a good impetus to play these calls. However, I said that if we get below this level, I'm out of my calls, right? And people don't pay attention to the exit. They just want to buy calls and hold. They don't know and are not trained on how to exit. So even these crude oil calls, when I say that I bought these USO calls, I do have an exit below this 76, 80-ish level. Then I'm out of my calls. That's it. I don't need to dwell on it. I don't need to cry about it, right? I'm here to make money. I'm not here to be right on every trade. So I'm going to take, when something fits my A+ requirements for a trade, I'm going to take that trade and we are going to let it play out to my target, potentially add along the way on retests, right? Or I'm going to exit and that's fine. But what I'm not going to do is sit there and hold it and let it bleed. So crude oil is really my first play here. Now, I did want to trade volatility, and kind of sucks that I didn't get in on Friday when we closed this entire gap here, because I bet you VIX is going to pump like crazy next week. So I will have to wait on the VIX. I cannot enter late. Entering late on the VIX is probably the worst trade that you can find in the market after the move has been made, right? We did play the VIX Friday, January 24th, and I sent that to you guys in the last update. You can go back and watch the video, and we capitalized on this VIX jump. It looks like we will likely get another VIX jump come Monday, February 3rd, but I cannot chase it. So I'm going to have to wait on the VIX. Now, I'm very curious what gold did the last trade war, right? Did we get an appreciation in gold, or did gold also drop in 2018? So let's take a look here. In January of 2018, this was where the stock market hit an all-time high. But when the stock market dropped, gold also dropped, by the way. So gold wasn't the safe haven here. Now, things are a little different because of the inflation story, as well as the rates story, as well as the Fed story, right? But gold is one that I'm looking to potentially, and I say this with a grain of salt because I want to see how the market reacts, but potentially there is a short on gold here, at least to get down to the 2,800 level on the futures. On GLD ETF, that'll be around 254. So I might entertain that when the market opens on Monday and see how it sets up. So that one is on the table. Now, Tesla, I actually took a Tesla short, believe it or not. Now, you guys might be like, whoa, what? Yes, I took a Tesla short. Now, I might add to this position depending on what happens next week, but right here is the Tesla short that I took so far, just one contract, even though, it is $2,300. But I bought the 405 put in my public account expiring February 28th. Now, I also day traded Tesla on Friday, and that was insane. This is part of the reason why I set up the shorts. So let me show you my Tesla puts on Friday. I bought the 412.50 DTE puts on Tesla, closed these for 135%. Now, why did I short Tesla on Friday, and why am I looking to short it going forward? Okay, this yellow line right here, this is the all-time high on Tesla, previous all-time high before the one that we made in December. We got a pop above, right? And then we hovered above it, popped back below it, and are now trading it. First of all, before I jump into the short on Friday, I want you to see something here. If I inverted this, right, and I showed you this, would you long this or short it? Be honest, right? You see this break in structure, retest of the level, retest of the level. Would you long this or short this? You would probably long it. So if we invert it back to regular scale, if you would long it, inverted, what would you do now that it's here? Would you long it or short it, right? Here's market structure. We broke market structure and are retesting previous all-time high. Now, on Friday, it was up 4%, but here's the reason why I shorted it. We had this consolidation pre-market, then we popped above. Remember that yellow level, I kept it there. The market does not forget levels. Popped above, right? And then we popped below it. So we popped below it, and then if you look at the lower time frame, once we pop below it, we retested it. That purple line is VWAP. So retested that level at VWAP, and then the Trump news came out. So I ended up buying those puts at that level, riding this all the way down until we got to that 5-minute fair value gap down here. This is a classic power of three intraday. But seeing how weak we closed off of that level showed me that this level is so strong as a resistance. And if you look at the daily on Tesla, you can see that Tesla did not pop above that level. It's still a major level. So we hit not only the downtrend line, but we hit that, right? So I want to see if we get continuation on Tesla. And you guys know I'm transparent with you, so I'll update you later. If you guys aren't in the Discord, I'll update you later about whether this worked out or not. I actually didn't even send this on the Discord. I took a starter position myself, and I will look to add to the position if we get a confirmation. Now, where's my invalidation? Because that is super important. Well, if I shorted this level, my invalidation is actually this recent high here, and not that bad at around 440. If we get to 440, I will exit this position, but my plan is to trade this to 360. Now, why 360? Because that is a level. It is a key level based on price. If you look at that 360 level, resistance, 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 support. That is a very key level. Also, after hours, when we were bouncing around on earnings, that level was almost hit. 364 is where we got to. So I'm betting that we get to 360 at least on Tesla. Now, my invalidation level, very important, is 440. So I don't need you coming here saying, I took the puts and I don't know what to do with them. No, you know what to do with them. In terms of stocks, I'm looking to buy NVIDIA, always on the table here. I'm looking to buy NVIDIA. Next, I'm not touching this. And again, I'm not playing short-term calls. I'm not playing even leaps yet. The next buy on NVIDIA for me will be 105 at the 300-day moving average. We haven't hit that since January 2023. Now, I have no doubt in my mind, NVIDIA will get back to all-time highs, right? And even though we're going to be very volatile in 2025, it could happen in 2025. But I have no doubt that these equal highs on NVIDIA will get taken, whether this year or next year. So I'm looking to buy NVIDIA. I really like Microsoft here as well at the 300-day. I sent out my thesis for Microsoft. These are all just long-term buys. Not buying more Google, although our Google position hit an all-time high. We bought it at 150. Bought some shares of Apple at 220 once it hit this level here. Advanced Money Destroyer. This is not for me at this point. I think AMD is going to go below 100 eventually. Very easy that AMD goes below 100. I'm not touching this now. Clear lower highs and lower lows. There is no reason to enter this, in my opinion, long-term or swing. I did buy some XLV, which is the healthcare sector of the S&P 500 when it retested this 137 level. And if that wasn't enough, in terms of earnings this week, we have Palantir, PayPal, AMD, Google, Snap, Chipotle, ARM, Ford, Uber, Disney, Qualcomm, Toyota, Amazon, Roblox, Cloudflare, Affirm. So many damn earnings. Wow. This is going to be another fireworks week in the market. In terms of earnings this week, I might play Palantir earnings. You can see here it says the options market overestimated Palantir stock earnings 25% of the time. So most of the time, Palantir beats the expected move, so might play a strangle even though it's going to be expensive. And I actually whiffed on the last Tesla strangle based on similar data. Now, I bought PayPal a year and a half ago, and honestly, I'm thinking about selling my shares here. You can see here, November 2nd, 2023, I said I finally like PayPal here at this level, trading at a 10 PE. It's trading at, it was at 55. Here, I can show you this. Let me move my fat head. But you can see here, it was at $55 when we bought it. And right now, looking at PayPal trading near 90 bucks, you know, up 60 something percent on our PayPal position. I don't know that I want to hold this into earnings, man. I don't know that I want to hold this into earnings. It's not a, you know, for me, it's not a blue chip stock, and I'm happy with the gains on it. So we'll see about PayPal. But if we see a whiff on some companies on earnings, there are some things I might want to pick up. AMD, depending on where it's at, might want to pick some up for the long term. Where's Walt Disney trading at? This is a company, oh, wow. This is another company that we bought the dip on. Let me go to our DIS alert and I'll show you. June 15th, 2023 was the DIS position. So we bought it when it was in the 80s, currently trading on 113. I'll probably hold on to this. And I already bought Uber shares in the 50s. Might pick up some more here. I think Uber is one of the strongest cash positions on the market. I really like this level here on Uber, which was the previous all-time high. You can see how many times this level was tested, was even tested last week on Thursday. So I might pick up just more shares here. Not going to be trading any more options just yet on Uber. Anyway, traders, that is all for this video. If you want to get access to my real-time alerts, the link is in the description below. I also go live every single day and day trade every single day, as well as go over a pre-market plan. So definitely sign up if you're interested in that. That is my thesis. I think we're going to see a lot of volatility. No surprise there. I think 2025 is the time to continue to raise a cash position because I think there'll be a lot of opportunities later in the year. I don't see this as a time to go in heavy on many things, just very strategic buys for the long term, very strategic swing trades with extremely disciplined risk management where you have an exit point in case it doesn't work out. Let me know in the comment section below, what is it that you're buying? Do you think that the tariffs are actually bullish or bearish for the market? Do you expect the market to decline for the rest of 2025? Or do you think that this is just a tiny pullback before a massive bull run? Let me know in the comment section below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.